Joining us right now to talk more about that is the former CEO of Saks Fifth Avenue, MasterCard Senior Advisor, Steve Sadove. Great to see you, Steve.
Good to see you.
Thank you so much for joining us. How would you characterize the weekend?
I thought it was a great start to the holiday season. Everybody I talked to says the traffic was there, both online and in the stores, which is unusual because the stores have been declining. Store traffic was up. There was enthusiasm at the high end and the low end, which is really a good sign for the next several weeks.
The Journal had a story about foot traffic not being as strong as for last year. Not to say that overall sales weren't good, because it was a strong weekend online. But foot traffic versus online, in your view?
Foot traffic was probably flattish, but conversion was higher. And the average unit, meaning the price that people were paying, was up a bit. So the combination of better ticket, a little bit flattish traffic, said that sales overall were probably up in the stores and up probably in the 20% plus range in the online.
Steve, if you were to break down the store side of things between luxury and sort of everyday, is there a compartmentalization of who's doing well and who isn't doing well right now?
Well, that's what I think is surprising, because the consumer's healthy. You have consumer feeling wealthy right now. They have a little bit more money in their pocket, and the high end is performing well, as is the low end. So off price, for example, the TJXs, the Ross, the Burlingtons, they're performing well and growing, as are the luxury players. You see it in the brands like Louis Vuitton and Gucci, and in the Saks Fifth Avenues of the world.
Well, why would a Nordstrom be down? I'm looking at the stock, Steve. Nordstrom stock, which is kind of not upper luxury, but still considered a luxury retailer by some, down almost 22% so far this month. And so, it's Nordstrom. Maybe it's a chain by chain story, but Target, for example, down almost 20% month to date.
Yeah, I want to separate the performance of the stock from the performance of the business and the consumer.
Okay.
The consumer's healthy. The earnings that most of these retailers are reporting are really pretty good. They're showing mid-single-digit comp growth. They're seeing better margins. They're seeing a little bit of SG&A pressure because of some of the shipping and labor costs, but the stocks have tanked. And part of it is a result of the fact that the outlook and the concern that's out there for what's going to happen as we go into the new year. Everybody is assuming that the fourth quarter is going to do reasonably well. Question is, with labor, with shipping, with tariffs, is next year going to be as good as we've seen this year? I don't know. That's the concern that the street is exhibiting. I think you're going to see a little bit of a pop when people are surprised that the holiday is as good as it's coming in, but time will tell.
I'm really curious. The Black Friday model also seems to have changed a lot. It used to be, you go for 5 hours in the morning, have all these big deals, and then everything would go back to normal. Now it seems like it's a whole weekend. Cyber Monday is becoming Cyber Week. Do you think people are going to get fatigued, or is this a smart strategy among retailers?
I think it's a smart strategy, but it's clearly different. I remember getting up at 3 a.m.
Oh, yeah.
So we had to go with my kids to go do the deals and go from one store to another. That's all changed. Now it's online. It's go early, go late. The deals are there all the time. The reality is that the season started before Thanksgiving. It's going to go all the way through the holidays. MasterCard is projecting that the Sunday before Christmas is going to actually be bigger than Black Friday. So you can see that this is all this entire period. You'll probably see a lull during the first week or two of December. Then it'll pick back up again. But the weekends are big. Every day, every Saturday and Sunday are going to be huge. But you're right. This is an extended period of time. And the retailers are very smart about it. They're putting deals in across the period. They're getting good pricing, smart pricing, early and late. And you're finding that there's a lot of news out there. Apparel is doing much better than we've seen in years. Month of October, it was the strongest apparel period. I think they were up 8%, MasterCard says, for the month of October. That's the best apparel we've seen probably since 2012.
So what about today? You've got Monday cyber sales. How big will today be? And what do you make of this worry that things are going to slow down considerably next year and the following year? I mean, when you look at what you mentioned, Dagan, a 22% sell-off in a couple of these stocks, the market's obviously anticipating things are going to turn.
Well, Cyber Monday will be big. We're talking $3 billion plus in online sales alone today. Again, we're looking at 20% plus online growth. This is really remarkable. But remember, online is still only 10%, 12% of total retail. Brick and mortar is vibrant. It's still the most important way that people shop. The outlook for 2019, I think you have a mixed feelings. The retailers are very optimistic. So if you listen to the earnings calls, each of the retailers, whether it's Jeff Gannett at Macy's or Brian Cornell at Target or Doug McMillon at Walmart, they're all actually feeling good about the consumer, good about their businesses. Their inventories are in line, which means the margins are probably going to be pretty good this holiday season. So the consumers are getting good deals, but that's built into the pricing model. And you go into next year and you say, okay, is the consumer, what's going to happen this week in the trade talks? What's going to happen with the markets? Clearly, when I ran Saks, there was a very high correlation between the stock market and luxury sales. We're still at a 24,000 Dow. So it's still a very healthy level, despite the fall off that we've seen.
No, I was going to say that it seems like being in the stores over the weekend, not buying anything, but that the luxury retailers, department stores are managing their inventory a lot better. You do see sales racks, but you have very selected items on sale, and there's still plenty of full price merchandise. Again, because of the immediate delivery of new goods, that we've moved away from the seasonal aspect of clothing. And so you definitely see much better inventory management among a lot of the retailers.
And I'm seeing that at the high end and the low end.
Right.
I think that the inventories are under control. And the consumer is looking for newness. Their excitement, whether it's athleisure, whether it's more form-fitting, it's slim fit for men. You've seen more narrower waistline product for women, and there's excitement.
No, I was going to say, I love the fact that you get an ad on Instagram from Saks pushing high-end yoga pants and high-end workout wear. That's what, because they can know just from the analytics they get from an Instagram, they can know what is selling. And so they're right there along with like a Carbon 38, which is a kind of direct-to-consumer retailer.
Absolutely.
Phenomenal.
Are you worried about profit margins?
I'm worried longer term about profit margins if they're affected by tariffs, if they're affected by the labor, the shipping.
Whatever they're affected by. I mean, these are all...
Oh, sure, I'm absolutely... But remember, dollars are what you take to the bottom line. So if you get very healthy comp growth and a little bit higher costs, you're still going to get some good profit growth. I am concerned about the percentage margin if a lot of these things come into play. Tariffs concern me a lot.
Steve, you mentioned inventories. One of the things we've been talking about a bunch is how a lot of retailers pre-bought a lot of inventory because they were worried about tariffs. Yep. If that's a one-trick pony, you can't do that next year. So tariffs are going to be a big issue for retailers if the cost of inventory goes up 20%.
Oh, there's no question that tariffs are a big issue, and the retail industry is very concerned about it. Now, most of the retailers are rethinking their supply chain. So you look at, how do I move my sourcing out of China and into other Asian markets? The problem is there aren't that many better places to go to. So it's going to have an impact.
Vietnam can't produce as much as China.
Absolutely. And some products just take a long time to change the supply chain.
So just to be clear, you're very positive in terms of where sales are going, in terms of the health of the consumer, even in the coming years, as well as margins. It doesn't sound like you're worried about tariffs, but it doesn't sound like you're expecting a downturn after a very strong fourth quarter.
I'm not expecting a downturn. My expectation would be that 2019 is going to continue to be a good year, a good period of time for retail. Clearly, anything can happen if you have a political disruption, if you have a major blow-up in the stock market. But my expectation is that we're in for a continuation of what has been a very healthy trend. Will go into 19.
Steve, it's good to see you.
Good to see you all.
Thank you so much. Steve Sadove, former CEO of Saks Fifth Avenue.